Just about every market that we look at in the Southeast and Southwest is just doing unbelievably well. The multifamily asset class is just doing tremendous. And I think part of it also is that, there's these huge investment asset management firms out of New York and Chicago and other places, and they've just raised such a huge amount of cash that they're making investments at yields that don't make sense to me. It may make sense to them, but it doesn't make sense to me. So it's just
what kind of yields are you seeing people?
3.5 cap. A 3.5 cap is normal, right? So that's like a normal deal nowadays. And you used to hear about that in LA or San Francisco or New York for super trophy properties. Right now 70s vintage is selling for 3.5 cap in Orlando. Okay, so I mean it's just incredible. So their yields are their threshold yield, and a lot of these are non-traded REITs that have raised this enormous amount of money. And those non-traded REITs have to get it out, and they're basically projecting a 5% yield. So if they can get their investor a 5% yield, they're happy, right? So so their cost of money is so low. As long as they get to an overall 5% yield, they can accomplish that. For me, a 5% yield is most of our investors want 7-8% yield, somewhere in that range. 5 years ago, it used to be 10.